Good morning, everyone. This is Jake with Trade Confident, and today I'm going to be bringing you some news analysis and predictions for XRP. Yesterday, we had a big win for XRP against the SEC, and I'm going to be talking about that first. But before that, I just want to say thanks so much for watching, and if you find the content valuable, please like and subscribe. It really helps us grow the channel and provide better and better content every single day. Now, let's dive into the news. This article comes from the Daily Hodl. Ripple wins latest legal rounds to compel the SEC to produce evidence in the XRP lawsuit. The U.S. Securities and Exchange Commission is losing a prominent argument in its lawsuit against Ripple Labs. Federal Judge Sarah Netburn denied the SEC's attempts to not provide internal documents relating to former SEC Director William Hinman, who made a speech in 2018 saying that Ethereum was not a security. Netburn first ordered the SEC to produce emails relating to the speech in January, but the SEC challenged the order. Netburn struck down the challenge and ordered the SEC to hand over the requested drafts and emails in April, though she did grant a clarification. The SEC then requested more time to file an objection against Netburn's decision to overrule their challenge. The regulator claimed attorney-client privilege protected the Hinman documents. However, Netburn shot down that line of reasoning in her most recent order. Here's a direct quote. The SEC has distanced itself from the speech to avoid discovery and sought to preclude Hinman's deposition on the grounds that whatever he said in the speech, it had nothing to do with the SEC's position. The hypocrisy in arguing to the court, on one hand, that the speech is not relevant to the market's understanding of how or whether the SEC will regulate cryptocurrency, and on the other hand, that Hinman sought and obtained legal advice from the SEC counsel in drafting his speech, suggests that the SEC is adopting its litigation positions to further its desired goal and not out of a faithful allegiance to the law. Jeremy Hogan, a crypto legal expert who's been closely monitoring the case, says the SEC has announced it intends to appeal Netburn's latest decision. So July 26th, will we see an appeal? Come July 26th, we'll be checking that out. The SEC has already said it intends to appeal this order, so I think we should expect it. The SEC first sued Ripple in late 2020, alleging the payments firm sold XRP as an unregistered security. This is why the previous director's quote saying that Ethereum was not a security is important, and why the SEC does not want the courts to see those documents. With all that in mind, this feels very bullish for XRP holders, and I'm excited to see where this goes next. I'm hoping that XRP does win this lawsuit, and it should put a very strong precedent for crypto in the future if they do. If not, we'll likely see some strong regulations come from that, which isn't all that bad, but it will be rough in the short term. With that in mind, let's check out the metrics. Here I'm looking at XRP USDT on tradeconfident.io. Right now I'm seeing a 73% chance of a move down. This comes after a strong move up in recent days. Long versus short trades. For the long trades, we're seeing a slight, tiny dip with short trades not moving. This is slightly bearish in the short term, but very little movement means very little likelihood of that. In the long term, however, longs are vastly ahead in volume against the short trades. This shows bullish long term. With all that in mind, the market cap is also decreasing. This just means that relative to other coins, it is decreasing in value, although not much over the past month or so, just very slight move down here. Let's get into the indicators. So for those that don't know, the trend exhaustion at its simplest predicts trend reversals. When it's in the top red section, it's likely to see a move down. When it's in the bottom red section, it's likely to move up. The price versus whale money flow tracks whale money movement in the market. As it moves down, it means whales are selling and taking money out, likely driving the price down. As it moves up, it means whales are entering trades and bringing money back into the market, creating bullish sentiment. Combining likely trend reversals with confirmation using whale money, this provides about an 80% accuracy in your trades. You can see just right here, we saw a top here and here. The price shot down. We saw a bottom here and here. The price went up, and that followed that trend all the way through this pattern. Now, the pattern that I'm looking at here is a descending triangle. Descending triangles are defined by a descending resistance with a horizontal support. This creates that descending triangle pattern. Typically, this pattern is actually neutral. It's hard to tell until it's about to break out which direction it will break out in the future. They tend to break out about 50-50 in either direction, although some analysts do feel it's more of a bearish pattern than a bullish pattern. From what I've found and in my experience, it does tend to break out to the top side for me more often, but many analysts disagree. A lot of research also says that the pattern is just neutral. So the way that we're going to find out which direction it's going to break out is by using the indicators and divergence from the price. Let's say it moves down to this support level. If the trend exhaustion of the price versus well money flow are high on their charts when it touches this support level, as I said before, when they're in their top sections, we're expecting a large move down. So if we're at the support level with the indicators showing a possible move down, we're likely to see it break down. The opposite is true when looking for a move up outside of the triangle. If the trend exhaustion and the price versus well money flow are in their bottom sections while we are at the resistance line, this means that we are expecting a large move up despite the resistance, and this is likely where we will break up. Now, I do expect a breakout in either direction. We will have to see very, very soon. Typically with triangle patterns, the closer you get to the apex, which is going to be about right here, the more likely it is to break out. On top of that, we have 3 touches, 1, 2, 3, and 1, 2, 3 on both the support and resistance lines. The more touches, the more likely it is to break out as well. Now for a price prediction, let's switch to the one-day chart just to make it a little bit easier to read, a little bit more concise data. Right now, we are moving down. We did see a breakout to the top a little bit, but that was just a test, and we have since moved back down. What I'm expecting to happen here, as long as the indicators continue moving down, which, interestingly, they're gone horizontal, what I'm expecting to happen is for the price to drop to 31 cents. Now, I do expect this to take about 3 days, so we will likely see that price on Monday, July 18th. I would say give or take a couple days, but very likely, just because we've been following this pattern so strongly, I do expect a move down. On top of that, general market sentiment feels somewhat bearish at the moment due to the fact that we just saw moves up. Usually once you move up, especially in a bear market, you're going to go down again. Right now, we're also seeing high selling volume. This further indicates the likely move down, but we will provide updates on this as that changes. With that in mind, we would absolutely love to trade with you. If you head over to charts, you'll find that Bitcoin USD is free. We provide the metrics and trade setups for free if you'd like to try a trial of our membership before joining. For those that are interested, all you got to do, not financial advice, trades are all at your own risk. What you are going to do, if you so choose, is to take whatever investment you'd like to put into Bitcoin and divide it into 4 equal parts. From there, you're going to set buy limits at each of the prices indicated by the yellow lines. After that happens, all you got to do is walk away. As you go about your day, the price will drop because it's a bear market, and we can expect that as the price drops, more and more buy limits will be hit. As that happens, your break even will lower, bringing you into profit faster on the bull run, making you even more money as well. Now, when you're ready to join the membership, you're going to head over to pricing. Scroll down here, you're going to see the trade setups, whale metrics, $95 a month institutional grade membership. With this, you'll gain access to the metrics and trade setups for all 16 coins we have on our website. You'll gain access to our Telegram channel for general trade confident alerts. You'll be able to watch our masterclass courses, which are fantastic for beginners and expert traders alike. You'll get to talk to like-minded individuals in the Trade Confident community, bounce ideas, trade setups, anything you'd like to learn. You have a huge group of like-minded members that would be happy to talk to you. Likely, most importantly, you're going to gain access to our Inside Tips page. This is where we're going to post members-only market updates and trade setups. You'll get first access to this in order to set up the great, perfect trades. Our scalping trades have been making 40% since May 18th. It's an incredible strategy, and it's working great for many, many members. Last but not least, you'll be able to join our Inner Circle Zoom coaching meeting. It is a monthly meeting. The next one's coming up July 21st. You'll be able to interact with the Trade Confident team, ask questions, and learn a lot alongside your fellow traders. Again, July 21st is the next meeting, so make sure you have your membership. It is members only. We hope to see you there. With all that said, thanks so much for watching. If you enjoyed this video, please like and subscribe to stay updated. Trade safe, trade confident, and I'll see you in the next video.